All right. Good morning, traders. This is Nick Mastrandrea from Market Tea Leaves. As many of you know, we're always on the lookout for new and innovative ideas that have the capacity to be game changers. Today we're going to be speaking with Michel Juliene of Trader Crude Oil. Michel has come up with a very innovative idea that could potentially be a trendsetter in this industry. Now, Michel trades only crude oil. As many of you know, and as many of my followers and subscribers know, I watch the crude market avidly. What makes this service so unique is that instead of telling you what the subscription fee is, you contribute what you think his service is worth. Now, you have to admit, this is new and very unique. Think about it for a minute. How many times have you gone out and actually purchased a solution, or what you thought was going to be a solution, only to find out that, well, it's really not worth what they're asking for, or, it's really not, quite as advertised, etc. So you have to admit, this is pretty new and extremely unique. So I invited Michel to tell us more about himself and his service. Now, Michel is French-Canadian, as many of you will probably know after he speaks. So Michel, good morning. How are you?
I'm good. How are you, Nick?
Okay, very good, very good. Or should I say, comment allez-vous? I mean,
Très bien, merci.
It's always funny when an American does it, believe me.
That's not, your French it could be a little bit better, but that's okay.
I know.
Don't worry about that.
All I can say is I try. That's all I can do, Michel.
Okay.
But I guess the first question I was going to ask you is because this is so unique and so extremely different, all right? And apparently, you've got a background in trading. You've been doing it for a while. I guess the question in my mind is, how did it all happen for you? How did you get involved in trading, and how did you I guess get to this point?
Okay. Well, for me, it all started in the 80s. So I was in my 20s at the time, and I started nibbling in stocks. Basically, there was some kind of a stock bubble. What else is new in the 80s here in Canada? Because the government was involved. The government was giving tax incentive to invest in the stock market.
Interesting.
Because they wanted to promote Canadian companies going public. So every time the government seemed to be involved in something, it normally ends very badly. So a lot of people were investing. It was not really trading at the time. They were investing, but the market was in such a bull run that like they could have invested 3 weeks ago, and the stock had already gone up 50% or 75%. So there were like a big bubble going on. So of course, it got me interested. So I started to invest a little bit of money in the stock market. Actually, I started investing about 3 months before. If you remember, Nick, in the 80s, we had the Black Monday.
Yeah, remember that.
You remember that?
Oh, yeah.
So I had just invested about 3 months prior to that day. So that's a lesson I learned immediately. You don't. It's not important to really be in the market. What's important is when do you get in the market, the timing of things. If I would have entered that market, 6 months or a year prior to that, I would have done extremely well. But since I entered that market at the last minute, basically, my portfolio was cut in half, basically, in just one day. So that taught me a lesson. Timing is very important, and from timing, it evolved into trading, because trading is really all about timing. So I was not really in a trader for, from 87 to maybe 99. I was doing other things. But in 1999, I really started. I had a school, and the school had to close. So I ended up without a job, but I I had that interest for the financial markets. That was still, that was still very important to me, and so I started trading the forex, basically the currency market, because there was a huge, trend at the time towards, first of all, towards the online trading phenomena. Because if you remember, in 1999, the computers we had, they don't compare to what we have right now. So it was really the start of electronic trading using computers, online brokerage firms, and all that got me interested in trading. So from there, I did a lot of currency trading in the beginning of the year 2000, and with limited success. Okay, I have to admit that as a trader, you normally have to lose money in order to learn something. So, so I guess it's pretty, normal way of learning. It's pretty hard pretty difficult in trading to hit the ground running. You have to normally pay your dues and lose a bit of money or a lot of money for some people in order to learn something about trading. So, from currencies, I got involved into futures, because one thing leading to another. When I realized that in the forex market, the broker you do business with, because it's an interbank market, so the broker you do business with is normally your counterparty. Okay, so this organization has a vested interest in you losing money.
Right.
So I'm not saying here, I don't want to start a fight here, but I'm not saying that they're all like that. But I wasn't comfortable with the idea that every time I was in a trade, that my broker had a vested interest in me losing. So I started to look around and discovered the futures market. And because you can trade currency through the futures market as well, as you know. So so I started trading, currencies futures, and one thing leading to another. I ended up in the crude oil market about 2 years ago, and I decided to focus exclusively on it. One of the aspects of my trading, or of my lack of real success prior to 2-3 years ago, was that I was looking at too many markets at the same time. So I was trying to be in corn and wheat and oil and gold and euros and British pound and what have you. Okay, and that was difficult. I would make money on one particular instrument and I would lose on the other one, and it was really exhausting in a way to try to concentrate on all of those markets at the same time. So the one that really attracted me was crude oil because of its volatility, because of a lot of things actually, and that's when I really decided to focus exclusively on it. And I'm glad I did, because it really started my career. My profitable career, because now I'm an expert, let's say, in WTI futures, and I only focus on that market, and I'm doing very, very good.
Well, you see, you bring up a good point, Michel, because that's one of the things that I try and impart with a lot of my folks as well. I mean, you can't be jack of all trades and master of all of them. It's just not possible.
Right.
You're better off focusing on those markets that you're very familiar with, because the way I view it is futures, your commodities, etc. They all have their own unique characteristics, personality, if anybody wants to call it that, and they operate in a certain way. Okay, and when you become familiar with it, you know that it does certain things, perhaps at certain times of the day, or if something's going up, the other thing is going down, etc. They all have their own personality, characteristics, what have you. And I think that, and I think that focusing on, a few of them, just a few of them, will put you way ahead of the game because you know that you know.
Exactly, and some people, I guess, some traders are comfortable trading different instruments at the same time.
Mm.
Personally, it took me 10 years to figure out that I should focus on one thing, and so I'm so I guess it's if some people, some of your followers can relate to my story, that's good. If they you can make a very good living concentrating on just one market, and people sometimes they spread too thin. I mean, they want to be everywhere all the time on every market, and they don't end up making money that way. They end up
That's true.
breaking even, best case scenario. So
True. Very
so
true.
for me, it was a discovery basically. It's a simple thing. It's a simple thing, but
Right. Right, and you're right. I mean, I'm a believer in keeping things simple. I mean, because to me, simplicity is the best. It works and does what it does. But I guess another thing that comes to mind is your platform unto itself really isn't a platform in that it's not necessarily a software solution. You're not offering a software solution to anybody, but rather they're seeing what you see as you make the trade. So in other words, I guess it's more of a trading room type of a situation. And one of the things that come to mind is because I've been through some of those in the past, and typically what they do is they use like a call out method. In other words, you kind of give them a heads up prior to making the trade. How does that typically work for you?
yeah, exactly. Well, that's going to be exactly the same thing. The objective here is to basically, for my subscribers, going to be to copy my trades in real time. So that's something I just want to make very, very clear. The purpose of that trading room is really to enable people to copy my trade. It's not like I'm not going to be teaching anything. I might comment the market here and there, of course, but it's not like how do you do that? How do you come up with your? How did you come up with your decision? Why are we long? Why are we short? So basically, the objective to copy my trade is to make sure that attendees get the same trade results that me, week after week. Which is in a way that's the only that's a very, very useful thing. I obviously cannot control what people are going to be doing on their side. They can listen to my or see me trade or copy my trade, but they can be doing other trades at the same time, and that will get in the way basically of their trading results. But the purpose is copy my trades. I have a good track record in crude oil. Documented track record.
Yeah, you do.
Just copy my trade. You're gonna be doing good month after month. So that's something I want to really make clear here. Actually, I'm just going to prepare a video for my subscribers explaining just that, because I think some people believe that I'm going to be teaching.
Right.
So the platform is really going to be a webinar platform, a little bit like the one we're using right now, where people will, through the screen sharing technology, will see what's on my computer, my trading platform. They're going to see me prepare my trades, prepare my orders, and they're going to hear me also calling the trades verbally. So I guess they should be able to enter, if they pay attention to the, if they stay focused inside the trading room, they should be able to enter at exactly the same price or roughly the same price as me, and get out at the same price as well. So we should be able to have the same, basically the same result week after week. That's my objective. Hope to be able to achieve it. Hope to be able to convince people to stay focused in a room where sometimes it's going to be very active, and other times it's going to be very quiet. So I think that's going to be the big challenge here for attendees. To stay, no matter the room, no matter the payment method. If you're part of a trading room, you gotta stay focused. You gotta pay full attention to what's going on in the room, even when there's nothing going on. Because you never know when the call will come. I would say on average, I only trade 3 or 4 times a day, sometimes a little less, sometimes a little more. So, on a 5.5-hour session, that's not an awful lot of calls, right?
True.
That's true. So it's going to be easy for attendees to sleep on the job, basically.
Right.
And that's going to be that's my main concern right now. I'm not concerned about my trades. I'm just concerned about will people be able to stay focused.
Right. Well, and you bring up a very good point, because trading unto itself, even if somebody's not using a trading room, is an extraordinarily focused endeavor, because anything can happen in the market at any time. And one of the things I tell my followers all the time is, I'll give them market direction at the start of a day, but I'll also have to say, could this change? Absolutely, because anything can happen in the volatile market. But if you look at or you think about the trading endeavor itself, a lot of people think that it's so easy. Oh, you can make so much money. It's so easy. The reality of the matter is, it's extremely focused. It's a mental kind of focus that you need to develop in order to be good at it, in order to be active at it, etc. And most people don't have that kind of discipline, unfortunately. But one of the things
that's when a trading room comes handy for them.
True.
Because they can they can get used to being part of the market, being part of a session, okay, and without having to call the shots themselves. So and that's exactly what you were saying: discipline and boredom. Okay, how do they handle boredom? Because you are creating yourself, Nick, so you know that sometimes there's nothing really going on.
Right.
You don't want to trade for the sake of trading. So
exactly.
So while you're waiting, your focus diminish. Okay. And I'm sorry. While you're waiting, yes, it's correct. While you're waiting, your focus is really not really keen. So it's a very, very, very long process to become focused and to become a disciplined trader. And I think
that's so true.
A trading room can help some people, not all, but some people, to live what it is to be a trader, full-time trader, without actually having the quotes unquote responsibility to make decisions.
Exactly.
Until they become really comfortable making their own decisions. So this is me personally. I never really joined a trading room. Actually, I never even had an intention of launching a trading room for, just a few months ago. It's because I had a number of my followers on StockTwits and Twitter that have requested that. Okay, because I was calling, I'm still calling actually for a couple more weeks. I'm still calling live on those social networks.
Right.
But with the delay, by the time you write your 140 characters tweet, market is moving very fast. Execution speed is a key thing.
Exactly.
So the
by the time you post it, it's already old news.
Not all the time. Sometimes they get a better entry price than me if they follow me to the tick. I might call a buy at 182 cents, and by the time they get the tweet, might be in their favor. But sometimes because of my expertise in timing, because I'm pretty good in timing.
Good.
It all goes back to the the 1987 experience I had.
Of course.
So timing for me is everything in the market. I'm a short-term trader. I my average length in a trade is about 10 minutes, I would say.
Okay.
So some people are swing traders, others are scalpers. I would fall more in the scalper category.
Okay.
Because when you stay in a trade only 15 minutes, 10 minutes, 5 minutes, you're a scalper. And for me, it's a good way of making a living, and it's also a good way of not being exposed for too long in those markets that have been become very volatile.
Right.
Some people would say manipulated, rigged. I don't want to use those words because I think they're up to a certain point they might not be manipulated to such an extent. But for me, the less you stay in a market, the better you are.
Yeah, I mean, I would have to agree with that because it goes back to the old saying. There's an old saying on Wall Street that said nobody ever went broke by taking money off the table.
Correct. Correct.
In other words, if you're in a profitable trade, right, and you think you've reached the pinnacle of that trade, get the heck out because if you stick around long enough, guess what? It's not going to be so profitable.
Exactly. There's a saying also the first loss is the least expensive one.
True.
I would say that the first profit is often one of the most profitable ones. And also it's easier on you psychologically. Okay. If you have for some people, and I know there are lots of people like that. Trading is an emotional game. So if they stay very long for a very long time in the market, all of those uncertainties about their decision, should I stay, should I quit? It becomes really uncomfortable being in front of your computer. Not knowing if you're going to go out of the trade or if you're going to stick with it. So I guess it is for me. It's a style of trading, and I'm comfortable with it. Some people would completely disagree with me. They'd say, you better stay three days at a move.
No.
That's gonna make you $3, $4. But so different style. And the best style is the style that suits you.
Yes.
Personally, and the one that you feel more comfortable with.
And the other thing, Michel, that I really like about what you have over here on your site is you pretty much post what you do, which I kind of like.
Yeah. The blog was this blog was a commitment I made back in May, if I remember well.
Right.
It started back in June, actually. It started as a trade journal, basically, for myself.
Right.
Because there are lots of things that you can learn by reading and rereading. Things that happened, weeks ago, months ago. So I wanted to, find a way to discipline myself to write that. So I said the blog is, once the blog can help me achieve that objective of having a trade journal. That's not boring. And the second objective was to maybe try to help some people through my rantings, through my whatever I write. If it can help some people being better trader, and also in a transparency type of objective as well. I think a lot of people do not believe that you can make a living out of trading. Okay, they don't believe it's possible. They say, I don't know, 95%, even more, will never make a dime. In this activity. I think it's overstated a little bit. I think you can make it if you do it the right way
Sure.
if you adopt a discipline, if you concentrate on it, and I think the blog that I've done and the calls that I made are all public, actually. So they're all true. I mean, they've been all of those trades that are listed on my blog day after day have all been called live prior to you know, to their execution, and so that's why I have so many followers now, because I think transparency is a rare thing in those social networks. So there are lots of people that say, "Hey, I just got out of a trade. It was like 282 ticks of profit."
Yeah.
You never heard when they were in the trade initially.
Exactly. Yeah, I know.
It's pretty easy to you know, it's pretty easy to say, but
Yeah. Prove it.
prove it.
Yeah, prove it. No. Well, the other thing I like is that you also, you know, you list your wins. I mean, you know, you basically say what you did. But you also, you know, if you have a shortfall, you know, you're not averse to saying that. Well, you know, like for example, this one right here. You went short, you exited, okay, and you took a 20-tick loss. Now you're admitting that okay, hey, look, it didn't go exactly according to plan, but I'm up 66 ticks this week. You know what? That says a lot unto itself, because you know as well as I do, most people out there in this business, they'll never admit that they had a loss. I mean, they'll never tell you they had a loss. I mean, very, very rare.
Well, I mean, trading without losses is not trading. So I don't know why traders are afraid of admitting losses, because that's part of, I mean, you can't.
Part of what it is.
Yeah, that's what it is. If you can't accept, actually, that's one of the biggest problems with a lot of traders, and that was my problem a few years ago, not accepting having a loss, taking a loss. So you generate a monster loss after a few days.
Yeah, true.
And what's some, you know, in a trade that you should have exited at the right time, you didn't, you know, you hoped it was going to come back up or back down, or whatever the direction, the initial direction was, and so you end up with you know, giving back most of your accumulated profit and time.
Yes.
So admitting a loss is part of trading. You know.
Yeah.
Be very cautious about people who say they never lose, because it's simply not true.
Well, that's what I turn around and say to my folks all the time too. If anybody tells you that they're 100% all the time, do yourself a favor, get your track shoes on and run, because no one is 100%. I don't care who they are. You know, it doesn't really matter who they are. You know, J.P. Morgan, when he was alive, wasn't 100%, and neither was Bernard Baruch, and he was a pretty good
or Jesse Livermore, hey?
or Jesse Livermore, etc. You know, none of these guys were ever 100%. So guess what? If someone tells you that, run, because they're not being straightforward with you. The other thing I like about what you're doing over here, and something I kind of advocate as well, is, you know, you also input some, you know, some fundamentals in there in terms of things that are going on in the markets, or things that are, I guess, background noise to a certain degree, but they are in fact driving the markets, which is something that I do very avidly, because I guess one of my claims to fame is more commentary as opposed to anything else. But I use that for a specific purpose, and the purpose is to try and determine, you know, what market direction is going to be for that particular day, or what that trading day could potentially shape up to be. You know, it seems to me that you input that as well, and I think that's very good. It's very good to have that type of commentary. I think that's admirable.
Yeah,
that's good.
Thanks. You have to have a general understanding of the market you are trading, of course.
True.
Although with my type of trading, short-term scalp type of trading, you know, fundamentals do not really matter for me.
Right.
But I think, you know, sometimes it's good to have, for any trader, it's good to have a general overview of the market you're trading in. Are the stocks pushing, piling up, or are they diminishing, or all of those things have an impact and may make you feel more confident when you're in a trade, even if it's a 15-minute trade.
Sure.
If you know that you're in the, you know, in the general direction of the fundamentals are showing, I mean, it makes you. I always come back to the comfortable thing, you know, because for me, trading is 90% psychological and only 10% technical. So, and I guess it's probably the same with everybody.
Yes, very true.
More, how do you deal with your emotions? How do you deal with uncertainty? And that can make or break you as a trader.
True. That is true. Absolutely true. You become your own worst enemy to a certain degree, because what happens is your ego gets in the way, and when the ego gets in the way, that's like the kiss of death. You know, that's really it.
It takes a long time to figure that out, though.
Yeah, that's true. So Michel, you're offering a unique value proposition in that you aren't charging a monthly fee for your followers to view your trading room. I mean, anybody at this particular point could go to this particular site and say, hey, I want to be part of this. Okay, so you're not charging a monthly, and this is unheard of in the industry. And it could very well be a sign of things to come, in my opinion. But rather they make a contribution, based upon whether or not they made money, or whether or not what they think it's worth, if you will. Is that correct?
Yeah, that's exactly what it is. The fact of the contribution is not based upon if they made money or not, because sometimes you can feel that you didn't make money this week. But you didn't lose any money. You broke even, for example, which for certain weeks it might be the best we could do was to break even in a particular week.
Sure.
So basically, I bet that people will use a fair evaluation of what this service is worth or isn't worth for them, and I think it's what it should be, basically. Of course, if someone doesn't give anything at all, there's no minimum, there's no average, there's no percentage to follow. But someone who would, I don't know, week after week, still be in the room but not contributing to the room, I would tend to consider that he's not satisfied, or he's just someone who just wants to stick around for nothing, basically. So I'm not sure what it's going to, like you said, it's an innovative solution. It's not been done. I don't think it's been done in the trading arena. So
No.
So I'll see what it's. But I trust that people will use that aspect of my service as a fair evaluation, and that they will, if they give something, they'll give it in proportion to what it was worth for them, and what they evaluate is fair for the particular week we've been through.
Yeah, I mean, I would have to concur with that. I think that most people are going to. They would purport to do the right thing. If they made, if somebody made, $2,000 a week, and I'm just throwing this number out because, it's just for the sake of just throwing it out. But if somebody made that kind of money over the course of a week, I'm certain, they're gonna think and say, you know what, this is a pretty good service, and I should contribute to it because I make quite a sum of money, and I think they would. I think that most people would. I think that.
And also, if someone doesn't have a big account, it's a very small account, it trades like with some brokers you can trade how do we call that, CFC or something? I mean, like a stock. It's related to crude, but it's not a futures contract. So you can trade like micro lots or very small quantities of crude oil. So you can make that guy can make only the guy that made 2,000 using a full contract or two contracts at a time. The other guy that's trading micro lots, he can make only, I don't know, $100 or $50.
True.
In the same week. So he shouldn't have to contribute as much.
Right.
So it's also what I wanted to achieve is a proportional to what you derived from the trading room. You assess an evaluation of what it will work for you.
Exactly.
So we'll see.
Exactly.
See. You know what? How the idea came for me? I used to be a musician, long time ago, and I remember. I don't know if you've ever heard of the group, the British group Radiohead. Okay?
Yeah, of course.
They, I don't remember one of their albums in the beginning of the 2000, I believe, 2003,
Right.
2004.
Right.
They put it on sale on their website. So it was available for as a full download, high quality MP3 or MP4. I don't remember exactly the file format. And you could pay whatever you could listen to it and pay whatever you thought it was worth.
Wow. Okay.
And it stuck with me. This idea as a if you like it, you're going to contribute to it. If you don't like it, well, you don't do anything. You don't buy it. You don't. You have it, and it was free for you. So
Interesting.
and I heard that they made a very, very good success with this formula.
Now, are you
marketing wise?
Right. And now, in terms of the contributions themselves, that's something that is going to be done via something like PayPal or some method like that.
Yeah. Correct. Okay. Every at the end of every trading week, okay, because that's also another. You don't have any commitment. You don't have any prepaid. I mean, you can trade this week, good. You can't trade next week. You're not prisoner of a monthly fee.
Right. Exactly. Or you could be on vacation, or you could have a business
trip. You could be on vacation, or there's something happening. You're not available to trade. So it's on a week-per-week basis. At the end of each week, what I'll do, I will send an email to each attendee, and with a PayPal link. That's it. That's all. They click on the link. They contribute whatever amount they feel is worth.
All right.
Okay. That's it.
Wow.
So it's a little bit more management, but it's not complicated.
Well, that's another I think a big difference too, because oftentimes folks are locked into a monthly type of an arrangement, and during the course of that month, there's some people out there that travel for a living. There's some people out there that have to attend a week-long seminar in a different country, or they have to go to a trade show for 4 days that week. They're not going to be trading, okay? And sometimes they get a little perturbed over the fact that I had to pay a monthly fee, but in reality I didn't use it for a full month because I had this thing going on, and it was work related, or I wanted to disappear for 2 weeks because I wanted to take my winnings in the crude market and take my family on vacation, or whatever the situation is.
Whatever the reason, yeah. You're not locked in the contract. Yeah.
Exactly. So they're not necessarily locked into the monthly scenario of I got to pay this guy $100 this month, I either use it for 1 week or 2 weeks, that I should be paying $50, or whatever, whatever the situation is. So that unto itself, I think is very unique as well. I think that's very key.
I've never seen that anywhere.
No, I know. I haven't either.
It's going to be. It shows the commitment to help traders participate in a trading room. At their convenience, basically, and to not be tied to any type of commitment. This is I believe because so far I've received so many registration. I was really overwhelmed by the
That's great.
And
that is great.
It's probably because of this concept of you're not tied to anything. You come, you trade, or you don't trade, whatever you do.
Right.
And at the end of the week, you decide if it was worth anything to you.
Yeah. That's very, very interesting.
I wish we could do that with our public servant. You pay your income taxes at the end of the week if you have good service from them. Otherwise,
exactly. Yeah, I know. Exactly.
You opt out of the system.
Yeah. No. Unfortunately, no such luck in that regard.
No such luck. No. Don't even think about it. Yeah.
Yeah, believe me, I like to do that with my property taxes too, because, my township ain't the greatest when it comes to like services, if you will. But they sure as hell like taking your money. That, without a doubt. Interesting. So, in recent years, there's a lot of this talk and I guess maybe concerns about things like high frequency trading, or commonly known as HFT, algorithmic trading, commonly known as algos, quant trading, etc., all this type of stuff. In your opinion, do you think that this is a fad, for lack of a better word, or do you think it's a fact of trading life today?
Yeah, unfortunately, it became a fact now. And when you trade only one market for many years, you see changes in a market when they come. And I would say that the last year, particularly, has seen a lot of weird, unexplained, sudden and violent moves. Things that I wasn't seeing, a few years ago.
Right.
So it is said. I don't have any statistic, although there's a website called Nanex. They follow high frequency trading firms and algorithm trading and all that stuff. They say that they represent 70 or 75% of volumes right now in the market. Mind you, there doesn't mean the crude oil market is affected at that point. But I noticed a few things over the last few months, that around lunchtime and towards the end of the pit session, there are some bizarre moves. Okay, and repeatedly, it's like a repetition week after week, day after day, of basically the same pattern. That you can actually, if they keep doing it, which I doubt they will, but I mean, if they keep doing it, you could actually exploit those, those moves, because they're so frequent and so repetitive that eventually you could even exploit them.
True.
Yeah. So they're definitely a part of the market now, and they're as you know, they're basically unregulated. So they can do whatever they can do, pretty much whatever they want. So a trader has to be aware that this is not the good old supply-demand thing going on here.
That's true.
It's more. It's trading has changed, and I link the fact these new way of trading at the speed of light. The fact that I don't want to stay in a trade for very long. That's one of the reasons why I became more like a scalper over the years than a position trader, because of those actions that are started by the high frequency trading firms.
That's true. And another thing I've noticed, relative to crude is, it used to be that when the weekly inventory numbers used to come out, which traditionally is done on a Wednesday in the crude market at around 10:30 a.m. Eastern time, that used to be like a real big thing. Traders used to line up, kind of waiting for that. And some traders would have the strategy of, well, I'll trade both sides of it. I'll do like a breakout trade. I'll trade both sides of it. So this way, if it goes up, I'll make money. If it goes down, I'll be in a no-lose situation. But unfortunately, what has occurred is, and again, it's my own observation. You know better than I. This is clearly, an area of your expertise. But I've been noticing that when the inventory numbers come out, it's not as big an event as it used to be. 4 years ago, 3 years ago, it used to be like this huge event that everybody would wait for, each and every week. And now it's like, well, yeah, it doesn't move the market. Yeah, it moves the market, but it's not as huge or as big a deal as it used to be, because even if the crude oil supply, let's say, is suffering, and prices in theory should be going up, you know what? If that inventory number comes in low, it's going to do what it's going to do. It's all relative. It's all based upon a pattern, if you will, or you know, what the market is doing at that particular time, that, you know, that type of thing. It doesn't seem to be as big a deal as it used to be. Would that be a correct statement in your opinion?
Oh yeah, totally. And I think the reason is that volume in general is about half of what it was a few years ago.
Mm-hmm.
So when you have a low average volume like we have right now in a lot of markets, not only crude oil, but in a lot of markets, it's a lot easier to, you know, to shake a market, you know, up and down within seconds, you know. So the strategy you were referring to earlier about, you know, being long and, or, you know, if it breaks above or breaks below, I'll be either long or short depending on. Now they break both sides, you know, at the same
Exactly,
time.
yeah.
A second. You don't
Exactly.
even have time to react. So and it's partly due, I think, not only to HFT trading, but also to the fact that the volume now has become very thin compared to what it was a few years ago.
Interesting.
So it's easier to manipulate a low volume market than to manipulate a high volume market.
Interesting.
So,
Interesting.
So personally, as a trader, I tend to be out of the market or flat when
yeah, me too.
EIA data comes in. On,
me too. My philosophy is I'll wait for them to report it, and then I'll gauge market reaction after the fact.
Correct. Yeah.
I don't.
You avoid a lot of losses and a lot of stop hunting strategies from algo trading and quote stuffing, whatever they use to move the market in both directions within seconds.
Exactly. Exactly.
But they do it on purpose, and this is a behavior that was not in the market, was not present in the market a few years ago. So it's definitely, and it definitely has an impact. And now trading is is more risky because of that. So you have to know when to avoid being in the market, and and also you have to try to exploit also some of their weaknesses, because since they're in that market and they seem to be there to stay, it's I try to exploit some of their fast movements. It's all related to the timing thing I was talking about earlier.
Exactly.
So I'm exploiting that very often for quick 10, 26 moves.
Yeah. Typically for myself, what I ordinarily do, and one of the things that I talk about in market tea leaves is specific times of the day to trade. Okay. And crude is one of those things where I'll specify like specific times of the day to trade, only because my own observation has been that at specific times of the day, it does something. And now, is it going to go long or short? No one knows until it happens. But at that particular point, depending upon the time of day that it is, the market generally has some very nice moves at around that time. You can't really specify the exact 10:30 a.m. on the dot. You can't do that, all right, because it's around that time of day. So the trick is
we've had those phenomena of leaking, news prior to the exact time, things that we weren't seeing a few years ago. So the markets are always changing, and one of our main job as traders is to adapt and to protect ourselves from those rude behaviors, I would say. And, so we have to play safe, and some traders, they want to be in the market. They want to be in the market all the time. They want to, they evaluate their trading by the number of trades they've made recently. So they're not going to be satisfied with me if the objective is to be in the market all the time, in and out and in and out and in and out. So I think now you have to be cautious. If you want to make a living out of trading, you have to be really in the market for a limited amount of time and be yourself some kind of a HFT trader.
Well, you got to, like you say, you got to be smart about it. You really have to be. You have to be smart about it. You can't. You know, you can. One of the things that I used to encounter, and not so much now, but years ago, okay, because at one time I used to have a Series 7 license, so I was a licensed stockbroker, okay. And one of the things that I used to hear all the time from people, and this is not now. I mean, I'm talking like maybe 8 years ago, maybe even longer, maybe 10 years ago, where you would hear things like, "Oh, if I would have just stayed in the market a little while, I would have made another 10 ticks." And I would turn around and say, "What are you complaining about? You made money in the market. Be grateful. Take that money and run. Don't ever complain to me about a winning day. Right? You want to complain about a losing day, that's one thing. Don't ever complain about how much money you didn't win when you won. I mean, because I really don't want to hear it."
Yeah, you are totally correct on that. The people that complain that they left a lot of money on the table are usually unexperienced traders.
Exactly. Yeah.
So they still have a few things to learn.
This is unfortunately very, very true. What advice would you give to like new or novice traders in your opinion? Because I know you've done this for a while. You've seen markets come and go. You've seen things happen over the last 20 years. What advice would you give to new or novice traders if they're thinking about doing something like this?
Okay. Well, the first thing I would advise them to do would be to become technically competent. I mean, you have to, you have to learn the basic, the chart reading, the different indicators. This is like, and the market you're going to be trading also. You have to look at fundamentals. So even before demo trading, you have to learn the basics. Most people won't do that. They won't do it. They want to jump right in the market. Sometimes on demo, hopefully for them, but they want to have they want to be in part of the action immediately. They don't want to do their pre-training homework. So I would advise them to be competent technically before even trying to do a demo to start demo trading. Secondly, once they technically are satisfied with what they've learned, then they should go on demo for at least, in my opinion, 3 to 6 months, and see during that period of time, and find out during that period of time if they can stick to a rule or to a system. And not changing systems 1 week after the other and going back to the old. This one was working better. Now I'm switching because I lost this week or I lost today, so I'm going to try another system. So if you're not able to stick to one particular set of rules during demo trading, I mean, it's going to be even worse when you start trading real money.
True.
A lot of people will not have the time to invest 3 to 6 months demo trading. They want to get their money back right now. They want to, and that's what I'm saying is very logical. I mean, you start with your homework, technical homework, then you do some demo trading for a while to see if you can cope with having to stick to rules. Are you a rule followers or you are rule breakers all the time? You gotta find out what type of person, what weaknesses you have before going live. Because if you go live immediately, of course, we all know that it doesn't end very well 99% of the time. So do your homework, do a lot of demo trading. And if you can focus on only one market, take it from me. If you can just become a specialist in one particular market that you favor, that you like more, most of all, then I think you're going to become when you'll start trading for real and start feeling real emotions about money, your trades going up or going down, going in your direction or against you. That's the longest. Actually, that's the longest aspect to. That's the aspect that takes a lot of time. coping with your emotions once you're in a live trade situation, a trade that's losing money, a trade that's winning. And so you can only achieve that through live trading, unfortunately. But if you've done your homework prior to that, you have better chances to end up on the positive side.
Yes.
And make a success, rather than jumping right away in the live market and losing thousands of dollars just to
yeah. Yeah, educating yourself is a very expensive proposition in the markets. It's a very, very expensive proposition, and
it's expensive in terms of time invested, not in terms of money. Like trying to find gurus and buying, spending money through your nose on different type of formulas. It's all for me. It's all not really necessary.
I know.
The main investment is time, and that's what people do not like.
Yeah, I know.
They want to start making money right now with this solution or that solution that they saw on a website somewhere.
Instant gratification.
Instant gratification.
Yeah,
patience is not part of our culture, unfortunately.
I know, that's true.
And I think that's the only way that you can make a success in trading, being patient with yourself and spending enough time in front of one particular market and understand it correctly.
Well, your point's very valid, Michel, because at one time before all the electronic trading that was going on, and I think there still is this in the New York Stock Exchange, okay, and it's not the futures market, it's stocks, but the New York Stock Exchange has a position that they call specialist, and all that specialist does is they focus on that one particular stock, that one particular market, if you will. It's almost like a market unto itself. So if you're a specialist that trades IBM, you're following this thing like night and day, okay? Because you want to know that but you develop an understanding of characteristics of the equity. What it would do in a certain situation, what it wouldn't do in a certain situation, how you think the market's going to react to certain news coming out of that company, etc. All those types of things, and that's why they had them. They had them specifically for that reason, because these people did nothing but live, eat, and breathe that particular equity. I think the same analogy holds true for the futures market in terms of the actual instrument that you're going to be trading. What would it do in a certain situation? How would it react to geopolitical events or a geopolitical news type of thing?
I think it would be very difficult to be good to become as expert in several markets. So for the individual trader, that operates out of his bedroom office, or I think focusing on only one market. It can be euro, it can be crude, it can be gold, it can be E-mini, whatever it is. It's certainly a plus to be able to focus on one. And I think it goes against, what I'm saying is it goes against the popular beliefs that, you're a trader, so you trade many things. I mean,
you can trade anything.
And because today the market I'm trading is boring or it doesn't move, I'm going to go trade something else. So you hear a lot of that. I don't think it's a good thing. I mean, for me, at least it's not.
No, I mean, if I don't because my own personal philosophy is that, if I don't like what the market's showing me, there's nothing that says I have to trade it that day. I may decide that I'm not going to trade it that day because it's just not showing me something that makes any sense to me. You always have that choice, and certainly something I advocate as well. Look, if it ain't looking good, why throw away your hard-earned trading capital? Because my philosophy is I want to help people protect their hard-earned trading capital, because it's not easy to replace. It's once it's gone, it's kind of gone, and it's not very easy to replace all the time.
Oh yeah, it's so easy to lose and so difficult to earn. Right?
Yeah, exactly.
So preservation of capital should be the main objective
Agreed.
Of every trader.
Agreed.
And profit comes as a consequence, okay, of focusing on your capital first, and the preservation of your capital first. It takes a long time to understand all of that.
Yeah, that's
you need
true.
to, even if I say it, even if you say it, as human beings, it seems like we have to go through our own personal experiments.
True.
And in order to learn something. It's unfortunate, but it's
true.
It's the way it is.
No, it happens to be very, very true.
Yeah. It happens to everybody.
Yeah. Now, I guess the other question is, at this particular point, I guess the trading room itself is not live yet. Okay. Do you have
It starts on November 4th.
It starts on November 4th. Okay, folks, just so you know, this will start November 4th. So, if this is something that is of interest to you and you want to partake in it, my advice is, and I would strongly advise it. Sign up. It's very easy to do. All you have to do is go to this particular website right here, and there's a contact field over here, etc. You can do
there's
that.
a sign-up page, Nick, on top.
And there's a
sign-up page.
Yeah, there's a sign-up page right on top. Okay. And
just fill the small form there, and that's it.
Yeah, that's it. That's it.
You're
done. So, nice, simple, easy, etc. Just kind of the way we like it. But on my end, Michel, I mean, basically that was all the questions I had for you. I thank you very much for your time. I appreciate it, and I'm certain my followers will appreciate it. And it's my objective to spread the word on this as much as possible, because I think that, like I said, you're offering a very unique value proposition, and I think people ought to know about it.
Yeah, well, thank you, Nick, for giving me the opportunity to talk about what I'm doing. And
sure.
I wish you good luck with your Market Tea Leaves website as well.
Thank you. And we've been growing. We started out. I started that out on a very preliminary basis, Labor Day last year. Okay, but I didn't really get very serious about it until like this past March, and it has been growing. It really has been growing. It's been growing by leaps and bounds, which is a good thing. I think a lot of
markets are really broken. They're not correlated as they used to be.
They are not. Unfortunately, they are not. In fact, I think since June, it used to be almost an everyday occurrence where you either had a completely correlated market or an uncorrelated market. But since June, it's become more and more of a challenge. Ever since the FOMC started talking about tapering, it became more and more of a challenge, because it's not necessarily clear as to what's going to happen. So that has become more and more of a challenge, and I could probably count the number of days on one hand where from June till now I could say that we've had completely correlated markets either to the upside or the downside. It's become that type of challenge. But what we do is we're still very diligent in terms of reading the tea leaves. And one of the things that we've been able to do is we've been able to call market direction, fairly, it's not going to be 100% because no one ever is, but I would say fairly accurate to the tune of 70 to 80% of the time. And I think that people understand that the markets themselves are starting to change. It's not as clear cut as it used to be, and it's become more and more of a challenge. But certainly something that we are up to. So. We don't necessarily
adapting is one key element that every trader should work on.
Sure.
It's the survival of the fittest, I think, type of mentality here.
Exactly.
In those crazy markets.
I know, and let's face it, they're getting crazy.
Yeah, crazier by the week. Yeah,
exactly.
You're right.
Exactly. Well, in any case, listen, Michel, I thank you very, very much, and What we intend on doing is, showing this to a lot of folks out there so they're going to know more about it. And we take it from there, my friend.
Yeah, well, thank you very much, Nick. It was a pleasure for me.
Sure.